Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Well, good day, y'all. Ira Epstein of Lynn & Associates with your agriculture update, and this is for Wednesday, December 6, 2017, and the time right now about 2:50 p.m. Central Standard Time. There's a common theme that I'm seeing in markets. Other than the stock market, which has also got its own problem of taking some profits, as I'm seeing right now, most markets are under selling pressure, not buying pressure. You're going to see the meat markets, the cocoa, the coffee markets. You're going to see most of the grains, with the exception, we had a nice rally in the beans recently, but the wheat's breaking out to new lows on the move. Look at how the energies are getting hit. We had the old buy the rumor, sell the fact. They goosed everything up in front of the OPEC meeting. From that time, that goosing up, as I want to call it, all you've done is seen a setback in that market. So now the question is, what about the ag products? Okay. As you can see, you've gone on the soybeans on a weekly area chart from a break low that came in around September, end of August, September, 935.5, and you've gotten up nicely. You've rallied from there about 70 cents. Not bad at all. When you take a look at a daily area chart of closes, this week you added a very, very nice gain, challenging these old highs. So the bean complex is a bit different than most of what I'm talking about. When you come here on the daily charts, yesterday you were up, for example, up 10 cents. You gave back half of that today. But all the market really did on this break is what? If you've been watching, I've been pointing out something. Come right here with me, and that is Friday's action. And if we take a look, Friday had a low of 985.5, and the very next day the market gapped higher, and it leaves a gap in the chart between Friday's low and Friday's high and Monday's low. The market then rallied up a bit further, and I'm sure I said to you in these tapes, you know, often you come back and you fill gaps in the charts. So now what do we get out of the chart today? The market breaks back, goes right in here to the 995 area. Now let's talk what we're saying here. This high was 995 3/4. The next day's low was 996 3/4. So this break exactly filled the gap and the market held it. That's all that I'm saying as a technician. But you don't have gaps on charts very often. They do get filled. They happen, but it's rare. You can get a first gap, and then you can get a breakaway gap and an exhaustion gap. There's three different types of gaps. Most gaps get filled. When I look at the swing line, this break low is what I think screwed up the chart. You ended up, if you come here, with a pattern of lower highs, lower lows. I wasn't expecting that. When you take this high back out, you put in play lower low, higher high. All right, so now the market's got what? It's got a move to the upside that it's given up a little on. You're still over key moving averages, but you're not trending per se. I call trending that you have higher lows, higher highs in an uptrend, or lower highs, lower lows in a downtrend. You don't have that. You have nothing here, but you have thrust. You had a big up thrust in the market, and we've had one, if you saw on the weekly chart, for a while. Where might we see resistance? One of the tools that I use is Bollinger Band. And the Bollinger Bands came in, and they've been coming in since, let's go back to Friday. Up here, the market goes to it, goes again, backs in, fills. But it's still hitting. It's 3 days in a row. So the upper Bollinger Band's acting as a resistance point. Supports 989 1/4, and momentum is very overbought. That's the problem. The momentum is so overbought. Do you come in against the top of these bands, you have been rewarded with pain if you've done that each time. So I'm not sure that's going to change. The soy meal today had a big reversal, and in doing so, it made the new high on the move, closed lower, closed under the lower Bollinger Band. Okay, but I want you to look at what slow stochastics are doing. Both numbers on the close are over 80. Day before, they're both over 80, and the day before. So the only way that I see a correction of seriousness occurring is to get the red line here closing under 80, then I'll say maybe the market's going to go for the 18-day average of closes, which I call the line in the sand, to regroup. Other than that, I've seen markets ride Bollinger Bands with the embedded rating. In other words, this market still has a lot going for it. Admittedly, it doesn't have the pattern of higher lows, higher highs. This overwhelms it. That's the most important part on that chart. Soybean oil's the flip-flop, because the crush spread, they're taking the beans, they want the meal, they don't seem to want the oil, and you can see that in the oil prices falling. Remember, you take a soybean, it's useless until you crush it and you do something with it. So this market's riding this band down. It had one rally back up to the 18-day average, did it back here too, and it keeps failing at it. So I'm viewing this market, because of the embedded reading, very much in the bear camp. The corn market keeps hitting the 18-day average every day, not going anywhere, and in the process, it's narrowing in these Bollinger Bands again. You always pay attention to that. From this type of move came this break. You've tried a rally. It's not going anywhere, so that's not good at this point in time. As a chartist, I'm not calling a trend here. I'm saying it's got a lower low and a higher high. The momentum is down and the bias is down, and resistance keeps showing up at the upper Bollinger Band when you hit it, which hasn't been that often, but the 18-day average is very much in play. In the wheat market, you're still continuing this ride down. What is about this market is each time you have tried to play to get over the 18-day average to a higher number, it has failed, and it just did it again. Still very much in a downtrend. The world is in surplus in grains. Canada's going to have a big grain crop. That came out today. And look at how the momentum is still down. It is oversold, as I would expect when you hit a lower Bollinger Band you first become. That's all that I can say with it. This market's ugly. Sugar market broke out to the downside. Lower highs, lower lows. Oversold. First move today under the 100-day average. Now, this is yesterday. So yesterday, the problem is, and I got to come back here, this is what set up the downtrend, Monday's action. You had lower highs, lower lows. There was one time to sell the market, and it was this day with the stop over that high. If you waited too long, and there it is at that 18-day average, this is what occurred. And I think the pros started taking some of their positions off via the oversold condition. Again, remember what I said at the beginning. Everything agriculture related is under pressure except beans right now. You're seeing that here. Look at coffee. Lower highs, lower lows. Momentum down, trend down, still acting poor. Cocoa, a complete collapse of prices since 2200 plus. You've come right on down to 1900. Big break, embedded reading, riding the lower Bollinger Band, nothing friendly there. Cotton's one of the few markets that has held up. It's not going anywhere right now, but it's had an upthrust. It still has an embedded reading. If and when it loses that, and it will lose it, it's just a question of when, that red line, then I look for prices to try to retrace back to the 18-day average of closes. We already have a pattern of lower highs, lower lows. I would watch carefully the intraday charts. If you get under 72.14, it might be a tip-off that wants to make a move there. What do I not like? I never prefer being short over an 18-day average. And the reason is you're fighting the momentum of the market, the bias. The bias is up when you're over that. Look at how Catalyst collapsed. All it did is rally back to what I call that line in the sand. Collapsed, went down to the 100-day in the lower Bollinger Band, and it's oversold. Don't be surprised come Friday you get some profit taking, but there's nothing bullish on this chart at this point. You'd have to take out Tuesday's highs in both the feeders and in the fat cattle to say, okay, maybe you'll get some short covering. Barring that, you're just in a state of collapse in the feeders as well. And guess what? The hogs joined in today. Lower highs, lower lows, closed under the 18-day average, momentum turned down. Yeah, you don't want to see this high taken out of 71.60, but barring that, the market seems to be putting in play that if it does let go like the other meats have, the cattle and the feeder cattle, maybe it too is going to head down to these numbers. So you look at it hard and you wonder, what do you have? I want to remind you, I offer my market research, and in my research, I cover a lot of these markets. I talk world economy, I give you an idea of what I see going on, but in the morning, you're able to come in and see what we call a morning subscriber video. And in that video, what I try to do is review with you 40 charts. And I'm going to throw out buy and sell ideas. I'm going to go through a lot more than you're seeing right here and set you up for the morning as best as I can, which is just as best as I can do, with trade ideas. You can take them, don't take them. There's no gun to your head, but you're getting another look at the market. And these are how those charts will look. I back that up because in the mornings at about 11:30, I publish a market letter, a consultancy report, you might call it. And I give you an idea of a synopsis of all the events of the day that are moving the markets. If there's something that you have to keep your eye on, it's a watch list, and it's meant to be short. It's not meant to be pages upon pages. It's not going to do that. It's going to not be a paragraph either. I mean, it's nice. This is what it looks like behind me. I back it up with phone updates, so you get to see what is going on there. And how you get this all, it's simple. If you haven't tried it, give us a call at this number. Go to our website, sign up for it. You can click up here if you're watching me on YouTube, or underneath us, it says, click here for Ira's free information. It's Christmas. Take advantage of it. Enjoy it. I'm Ira Epstein. You have a great day.